respected this HVN 1, 2, and now the third time. So you could have bought here, here, and here. And when I say you could have bought here, was there a 100% guarantee that market was going to reverse from there? No. But was there a very high probability that market will reverse from there? Yes. Now, what if it does not? Okay, you might say, Dean, you are just cherry picking the examples. What if it does not bounce from here? Now, a good trading method has one very important characteristic, and that characteristic is defining the risk in a particular trade. You have a very clear indication of where you are wrong. Now, let me move this for a second. All right. Or I remove this altogether. Now, when you are looking at this particular chart, okay, even if you look at traditional support and resistances, you cannot say that this price was at a support when it reversed from here. Okay, here you can say because you have the first reference and then the second form, and then in the third case you can also look at this, but this was impossible to identify. All right. And now why are we finding support and why are we not breaking down? What is the logic? Now, the traditional support and resistances that we track, like the extremes, I'm not a big fan of it because apart from stop hunt, there is no logic that can be used to trade the extremes of a range. So this particular extreme that formed at 1, you can say that 2 was a stop hunt, and then why again the third time? You know, how many times are we going to hit the stop losses there or keep hitting stop losses? And sometimes we come to the reference, sometimes we reverse well above the reference. What all things are happening here? But now, if you use my logic, which is tracking volume, I can draw this here. I can say that, okay, this was the area of consolidation. What it means? It was an area of struggle between buyers and sellers, and then price broke out, so buyers won. That means this is the area which is dominated by buyers. And if an area is dominated by buyers, if prices come there, they will be rejected back up if buyers are ready to defend. Make sense? But if they stop defending, then you will see market going lower. So what do I know? I know that there is this HVN, and if prices accept below the HVN, if they spend time below the HVN, then what I know? That the buyers are not ready to defend. So I have a very clear reference or zone that tells me I am wrong. Make sense? Okay. So that is the benefit of this particular tool, is that it gives me this area which tells me that if market goes below this, I am wrong. And that is the reason why I am saying that you could have bought here, here, and here, because you have a very clear way of defining your risk. And that will tell you when you're wrong. When you're wrong, you get out, all right? And if you are proven right, like we have been proven on 1, 2, and 3 occasions, you could just simply use these beautiful entries to position yourself. And mind you, this is a daily chart. We are looking at a daily chart. So these moves are going to last for a week or 2. So you and going to cover huge price, distances. So let us put some numbers here. Okay, so this area is, let's say 21,900 is where I'm asking you to buy, and let's say 21,700 is where we put our stop loss. So see where we go from 900. This is, let me use this Ninja. Okay, so this is 21,900. Let me mark 21,700 for you. Oh, what happened? Sorry. This is 21,700, right? And now let us see what we could use as potential profit targets. So when it bounced from here for the first time, you use this high as your That is the closest reference. That is your target, and that level is 22,350. So we'll look at numbers in a minute. And in the second instance, you could use this as your closest reference. And now in the third instance, we already have covered a lot of distance. You can use either this gap or you can use this high as your reference for your target. So in the first trade, we buy at 21,900 and we exit at 22,350. Okay, so that is 450 points and our risk is 200 points. In the second instance, same thing, we buy at 900 and we exit at 600. That is a 22,600. So that is a 700 point move with a risk of 200 points. And now you have bought at same 21,900 and you can even buy a little lower at this HVN. And then we are still going higher, right? Now, either you wait for the high, and is there another reference that you can use to target? Okay, yes, there is. And what is? It is this consolidation that is happening at the top. So if I again draw another consolidation here, okay, now what is happening? See, it's very interesting. You can now look at this particular HVN, which is matching with 21,600, and you can exit your position at this HVN. So it again gives you 700 points for a 200 point risk. So within, from say March or late February to the current day, you would have made 1,850 points on Nifty. I don't think that's bad. I don't think that's bad at all. Make sense? So that is the usefulness of this particular indicator. Let me remove all these lines, otherwise I will keep wondering what they are for when I come back to this chart later on. And this is the red cross that you just click to get rid of all these indicators that you have plotted, right? So we have plotted multiple of them and we get rid of that. All right. Now this is happening on a daily chart. Can you use it on a short term chart? Absolutely you can. So you can use it on this chart as well. All right. So let me remove this VSA indicator for a minute, because then we will have a clean chart to look at. Ignore the delta indicator at the bottom for a moment. Don't get distracted by that. We want to study this. Okay. So again, here what I can do is I can go to indicators and I go to this and I double click on this. See, we get it here, and that's it. That's all we need to do. Now here, let us go through some of the options. TPO type is useful for plotting a market profile. You know, if you want to plot market profile also in this dynamic profile, then you can use that. I don't like that because I like to plot market profile only on the 30-minute chart. So I deselect this show TPO option and I'm not bothered about the TPO sizes as well. But it gives you all the features like ATR based TPO size, which I prefer. It gives you option to plot that also. Show volume profile, I want that, right? Show current session, I think it is for when you're plotting market profile. Show market profile lines for split, I don't want that. Halfback line, I don't want that. All these things you can enable and get a feel of that, okay? Session period. Now, yeah, this you have to keep it as it is. Don't change any of these settings, all right? And show left volume area, bottom table. Let us keep all these on and see what happens. Okay. Wait a minute, what happened?